Welcome to the Innovation and Compliance Podcast, part of the Compliance Podcast Network. Join us every week as we talk with industry innovators who are making compliance to help business run more efficiently and at the end of the day, more profitably. Here's your host, Tom Fox.
Hello, everyone. This is Tom Fox, and we are here for a 5-part podcast series on Rapid Ratings. I'm joined by Jim Gellert. Jim is the chairman and CEO of Rapid Ratings International. Rapid Ratings helps companies with their third-party supply chains around financial health. They have an incredibly innovative series of products and services that really need to be utilized and considered by the compliance practitioner. So, Jim, first of all, welcome and thank you for taking the time to visit with me today.
Tom, thank you very much. I always enjoy spending time with you, and this is a great way to do it.
So, Jim, one of the things I've heard you talk about in the past and Rapid Ratings really emphasize is that of managing supply chain risk. So I'd like to start with kind of the basic question of why is managing supply chain risk so critical in today's economy?
Well, I think there are a lot of different ways of looking at supply chain risk and criticality. But if you start by thinking about how diverse business partners are, and when I'm talking about business partners, I mean vendors, suppliers, as well as all other kinds of third parties. They are getting more diverse from a geographic perspective, from a technology perspective. And this is coming from there being more mergers and acquisitions and companies' expansion and getting more creative with outsourcing and working with different kinds of companies for different solution sets. So as businesses themselves are getting more sophisticated organically and through acquisition, they're working with a wider group of suppliers that have the ability to impact their businesses. And it's inefficient to have lots of extra suppliers. So companies are trying to trim down the numbers that they're working with, whether they're using a just-in-time or lean types of philosophies around supply chain. But they're working with fewer, so that means each one is more important. And criticality is something that can be measured in lots of different ways. How much money you spend on a company, how much what companies have access to private company information and your IT systems. And all of these things have led to the evolution of a much more complex supply chain that people have to manage, and they contain more risks. So supply chain risk management as a discipline has been evolving significantly and still has a long way to go, but there's a lot of work to be done.
Jim, I think most of my listeners certainly are going to be aware of risks from third parties on the sales side of things. But I was wondering if you could give us a few thoughts on how managing the risk in supply chain is different than managing risk on the sales side.
Well, there's definitely overlap, but in general, when looking at third parties, and the definition of third parties has changed quite a bit too, just over the last few years. When I talk about third parties, I think about any kind of a company that one is doing business with in a 360-degree way around a company. So that can mean suppliers all the way through to customers and intercompany affiliates and so forth. But historically, most third-party risk has been focused, particularly from a compliance perspective, on knowing your customer. And customer risk is inherently a bit more transactional than supply chain risk. And that's in part because of who's buying and who's selling. And when you're selling to someone and you are evaluating their ability to pay you, the traditional customer relationship, you need to make sure that that company is one you want to do business with and one that's going to be able to pay you on time and in the terms that you determine are economical for you. When you're looking at suppliers, you're buying from them, whether it's a supplier or of a product or a vendor of a service. But something that is on that side of your business is one that you're working with, not just for short-term or a series of short-term transactions, but for a very long term. You may have a 5-year product cycle, a 10-year product cycle. And if the suppliers that you're embedding into that portion of your business aren't strong for the long term or aren't resilient, then you've got problems that you're baking into the ecosystem of companies you're working with. So I think probably the biggest difference in customer evaluation and supply chain evaluation is you need to be able to understand the risks of those companies over the long haul, as well as the short-term risks. So you can avoid the short-term problems that could arise from a weak supplier, but also that you're baking in the most resilient and strong long-term partners to work with as you possibly can.
Jim, how would you suggest, or let me just set up this question a little differently. One of the frustrations I hear quite a bit is that compliance professionals don't know how far down the chain they should go to either evaluate risk or even manage that risk. So their immediate counterparty, their first party supplier, their first party sales agent, they may certainly understand managing that risk. But how about farther down the chain? How would you suggest a compliance practitioner begin to look at that issue?
So compliance practitioners don't need to feel at all defensive about this one, because there are a lot of supply chain risk managers who aren't sure how far down their supply chains they should go to. And regulators in industries where supply chain or third-party risk is regulated actually are pretty clear that the nth degree or nth tier supplier needs to be evaluated. And nth just means all the way, any of them. So it's not just first tier, second tier, third tier. It's whatever supplier in your supply chain may affect you. It gets really, really complicated. And particularly for a lot of the disciplines that compliance folks have been responsible for in their organizations, things like fraud detection, anti-money laundering, making sure that no one appears in a sanctions list. All of these things get more difficult exponentially as you go deeper into a supply chain. And the people on supply chain risk sides who have been looking at delivery risk and logistics and other operational aspects, including finance, newer elements like cybersecurity, it gets really hard when you've got to go to your supplier's supplier. The bottom line, Tom, is there isn't a really good answer for this, except that collaboration between a company and its first-tier supplier is really essential to understand what the second-tier and the third-tier supplier risks will be. Because many times people don't even know who their second-tier supplier is for a particular good or product or service, because their tier one has been delivering fine and they haven't needed to find out where that tier one is getting the parts that they're bringing in. So that kind of thing is changing a bit, needs to change more, but it really does start with collaboration and an understanding between a company and its tier one suppliers, that understanding the risk deeper than that is going to be important and beneficial to everybody involved in that chain.
Jim, one of the things that struck me literally the first time I met you and heard about Rapid Ratings was your approach to supply chain risk management and assessing financial health. So I was wondering if you could give us a few words about really what's the Rapid Ratings approach to that and how is that different than others?
Sure. Well, we think about ourselves as being in the business of transparency and helping business partners achieve it, benefit from it, and get a commercial value from transparency. And by that, we mean using financials and financial health as a determinant for whether companies are strong business partners. So ours is a quantitative system that allows us to ingest financial statements and be able to look extremely deeply into them through an algorithmic process that compares any individual company, public or private, from anywhere in the world, in any industry, large or small, and do it on an apples-to-apples basis with a lot of peer analysis that helps our clients to see deeply into a third party they're working with and understand what the short and long-term risks are and benefits are of working with that company. Part and parcel to that is being able to get financial statements from those private companies and being able to use the fact that the disclosure of those financials by the private company is generating a commercial value to them. And that's really about the transparency and the building of the relationship and really fostering that relationship of sharing data and using it together to be able to understand the risks and the opportunities that exist. So that really drives our business. We're doing hundreds of thousands of private ratings from around the world. And being able to do that and in conjunction with the public ratings that we generate really gives our clients tremendous amount of insight into the risks of companies that they're working with. And we're bringing out new products that allow us to give directional scoring even without the financial statements. And I think in a subsequent podcast, we may be able to get into that in a little bit more detail. But at the end of the day, it's really about being able to connect businesses and give them more insight into each other.
Well, Jim, unfortunately, we're near the end of our time, but I've been visiting today with James Gellert. James is the chairman and CEO of Rapid Ratings International. I hope you'll join us again tomorrow when we take up the always topical topic of innovation. James, many thanks.
Thanks, Tom.
If you're a compliance professional looking for a convenient and effective way to fulfill your continuing education requirements, go to fcpacompliancereport.com/courses and choose from 4 hour-long training packages that will keep you current. That's fcpacompliancereport.com/courses.